I'm John Hanna for CDTV.net in New York, and we have Greg Womack, President of Womack Investment Advisors, joining us from Edmond, Oklahoma. Hey, Greg, good afternoon.
Well, good afternoon, Don.
Oh,
How are you doing?
great, great. And yourself?
We did well. We're just enjoying this nice hot weather down here in Oklahoma. It's been over 100 this past week, and I think we're going to get a cooling trend, though, and it's going to be in the low 90s, mid 90s, so we're excited about that.
Um, Speaking of hot, what do you have for us with the market week report?
Well, John, the markets haven't been too hot. It's kind of like the sell in May and go away. I think a lot of people have sold in June and singing the sorry tune. But the Dow last week had trouble deciding which side of 12,000 it wanted to be on, but finally ended the volatile week just above that level and joining the S&P 500 and halting a 6-week losing streak. Small caps, Russell 2000 also managed to eke out a gain, but the NASDAQ continued to suffer, though the pace of losses slowed from the previous 2 weeks. Really a lot of mounting concerns about Greece. It hurt the global Dow and prompted investors to keep the yield on the 10-year Treasury just under 3%. So a lot of concerns about Greece, the Eurozone, also just the economy in general showing some signs of stalling some. So year to date, the Dow's up about 3.7%, the NASDAQ up about 1.1. Excuse me, the S&P at 1.1. The NASDAQ was down negative 1.37 for the year last week. As we currently stand, as of June 20th, around noon Eastern time, we have the Dow trading up about 85 points and the S&P up about 8 points. So we're getting a little bit of a rebound in the markets on Monday, June 20th. We talked, John, here a week or two, last couple of weeks really, how the market's really been kind of softening up and looking for key support levels on the Dow at around 11,700. And so far, that's held that level. It's kept above that trending line support level. And the S&P support level is around 1,250, and it is also kept above that support level. So really, as I mentioned, the NASDAQ, the one mainly that's been struggling year to date, it's dipped barely below its support level, the 200-day moving average, just in the last few weeks. Of course, it's up today along with the general market. As we look at some of the headlines last week, John, the European leaders continue to argue whether and how to let bondholders such as banks take a hit over Greece's debt problems. Greek workers took to the streets. They protested the austerity measures. The Prime Minister announced a new cabinet reshuffling. And the Standard & Poor's once again downgraded the country's bonds, this time to triple C, which means it's a pretty significant likelihood of a default. That's the lowest rating the S&P issues. So the cost of insuring Greek debt via the credit default swaps hit a new record. And basically it's saying that there's about a 75% chance that the Greek debt will default here, our government will default here in the next probably few years. So that's a little bit of some of the major headlines on the Eurozone, what's happening over there. On the U.S. front, consumer inflation did rise 0.2% in May. It pushed the annual inflation rate about 3.6%. Meanwhile, inflation at the wholesale level rose 0.2% for the month of a percent, the lowest increase since last July. That put the wholesale annual inflation rate at 7.3%, which is the largest year-over-year gain since September of 2008. We are seeing some softening in the commodity markets. The cost of raw materials fell 4.1% during the month. So for the sixth time this year, going back over to Asia, let's go to Asia because China, has been red hot. 6 times this year, the People's Bank of China which is equivalent to the Federal Reserve here, raised the reserve requirements for banks. Of course, this is a move in an effort to contain the inflation that is running 5.5% a year there, according to Beijing's National Bureau of Statistics. So we take a look at China. They're starting, they're trying to soften that. The inflation over there, it's been pretty crazy as far as the real estate prices, and a lot of their their stocks have been doing extremely well until recently. And John, I'll talk more about China here in the next couple of weeks. We have some time to schedule that in. Another interesting story is the China growth story, and what their future looks like. If we take a look at some of the conference boards of leading economic indicators, it did resume an upward trend in May with 0.8 of an increase. The strongest numbers are seen in the interest rate spread, consumer expectations, and housing permits. As we look ahead, John, investors will continue to try to figure out whether Greece's predicament will be resolved by bailouts, debt restructuring, or austerity measures, or maybe a combination of those. We'll also pour over the Fed statement after its Wednesday's meeting, and that's just a week before the QE2, the quantitative easing 2, is scheduled to dock at that point. So we have home resales on June 21st, the Federal Reserve Open Market Committee meeting announcement on the 22nd, new home sales on the 23rd, and the final quarter one gross domestic product, durable good orders and corporate profits on June 24th. We hope everyone had a great Father's Day, and go out there and have a great summer in your travel plans, and be safe. Until next time.
That's Greg Womack, President of Womack Investment Advisors, joining us from Edmond, Oklahoma. And I'm John Hanna for CDTV.net in New York.